Welcome back to the channel, everyone. Hope you are well. And today's video is going to be full of value. Make sure you stay till the end of the video so that you can be 100% sure you understand everything. Please leave a like and subscribe as well, and if you have any questions after the video, please leave a comment. Alright, let's get straight into it. In today's video, I'm going to show you how to get the most out of your entry, and the key for everything is to be patient. I'm going to show you two examples that wasn't too long ago in the market, and this is how I approach the real market as well. What you guys need to do, and this is how I backtest. And this, if you make notes of how the market moves, if you journal, I promise you this will help you in the long run. So when you see a market that has a big move like this, all right, so the normal trader wants to enter on that candle to buy at the lowest point and to sell at the highest point. Now guys, you don't have to enter there to get a huge big trade. So what I would do, if I look at this, just this piece of price action on the 1 hour, what happened? Why did this market make a big up move like this? A nice strong impulse move. Now, what I would do, I would take that wick, I would literally draw a horizontal line, and I would go left. I don't know what's on the left hand side. Why did the market make a big impulse move like this? Alright, here's the first price action where it touched. So let's have a look what happened here. We had a high, low, we had a nice order block there, big impulse move, liquidity that was taken there. So let's mark this area out. Okay, cool. Sorry. Let me just move this back where it was. Sorry guys. So there was an order block created. We in an up move, huge up move, and what was created? There's an order block there plus a fair value gap inside this order block. Alright, so let's start extending. Let's see what happens with the market. Let's see, because remember we marked it out. So this market literally entered on a fair value gap on the higher time frame, the 1 hour, and it made this huge impulse move. So it entered a point of interest, right? So now you don't enter just there. Now you need to wait and see, what is the market telling you? The market needs to give you a story. Now let this move play out. Don't get FOMO if you see, oh, the market is moving, I'm too late for the trade. You enter your buy here and then you get stopped out. Wait for this move to happen. If I only look at this piece of price action, what's happening? What's happening here? We reacted from our fair value gap. We broke this high. So that's a market structure shift. So now we wait for price. All right, what's happening? So the first thing that happened after we see this, remember we're just analyzing, we're not entering yet. So price broke market structure, it entered from a fair value gap, it touched. All right, we're still analyzing. Let's just extend this out. Okay, so price, this was the highest point. So let's draw our fib. Fib is below, our price is below the 50 here. Okay, let's see. We're waiting. Let's just delete the fib quickly. So we had this impulse move. Let's see what's happening. We draw our fib, so we're only looking for entries below the 50%. We have an order block. We have the fair value gap that was created there. Plus we have a nice big order block that's down here. Price went up, came down, had a small reaction from the fair value gap. Remember, we're not entering, we're back testing. Alright, price went up, broke through that fair value gap. It entered on this order block here, this one here. Let's just draw it out. Let me just move this there. Okay, we had price reacted from this one. Okay, what did price do? There's a market structure shift, but price immediately closed after breaking this high. Same with this one, it closed, so that's why we always leave the move to see what's happening. Alright, price still in this fair value gap, never touched our order block. Now let's analyze price. Alright, where would I enter if price does this? Alright, so it made a high, low, high that didn't break this high, so we're still in an internal down move. Low, high, low, and we are inside the fair value gap. Where's our most recent high? It was there. Market structure shift. We have an order block here. There's 3 down consecutive candles. Let's just delete this quickly. Okay, let's go to the lower time frame. Alright, what did market do here? Remember, we're in our fair value gap. So high, low, high, low. Market broke this high. What does the market leaves us? A big, now we can refine it a little bit. We have an order block there. And we have a fair value gap here. So now we're just analyzing. Alright, we made the big move. We came down to a point of interest. As soon as we touch our point of interest, and this is also cancelling out which one would be valid to enter from, an order block or the fair value gap, the higher fair value gap or the lower fair value gap. Alright, 30-minute broke this high, liquidity was swept, big impulse move. Is this fair value gap below the 50? Let's have a look from this low to this high. It's literally on the 50%, as you can see. Let's just put it there. Literally tapped our 50%. So this is a valid trade because it's in discounted area. 50% and below is discounted area. You could have entered your trade right there. Where would you target? You will target the next level of obvious liquidity. Because remember, on the bigger picture, we are still in an up move. We made this huge impulse move. We marked out our order blocks and our fair value gaps. As you can see, there's a fair value gap. Did the price break a high? No. There was our order block. Did the price break the high? No, so we don't enter. Did the price break the high when we entered this fair value gap here? Yes. Price broke the high right there. Wait for market to retrace. Enter your trade. Let's just delete this. Enter your trade at the top of the fair value gap. Stop loss below the low. Where do we target? Next level of obvious liquidity. That's a 2 till 10 risk to reward trade. Alright, let's see what's happening. Let's go back to the 1 hour. So this is how I backtest, and this is how I make notes. Because your eyes is going to get used to seeing this type of patterns in the real market. Let's quickly delete everything. Okay, so we entered here, we took our profit there. Okay, let's see what's happening. Price went up, 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 up. Where was the beginning of this big impulse move, this big one here? It was down here. So now again, let's see, we didn't see that price. Alright, let's see what's happening. So as you can see, price was in a downtrend. There weren't any significant big up moves. Did we broke that high? No. Did we broke that high? No. Here's a big impulse move. Did we broke a high? Yes, we did. Now you need to ask yourself, why did price break this high? Why is there a big impulse move? Then I just put my horizontal line on the wick and I go left. What happened? Where did it enter from? So quickly look here, guys. The wick literally touched that wick of the order block. Literally touched the wick of the order block. Look there. Exact price. Now let's draw that out. So this would be a big order block, small order block in a big one. Let's drag it out. Now you make a note. Alright, price came into an order block, it broke this high. Now we follow the same steps. So let's quickly go to the 30 minutes. Now on the lower time frame, you would also see we have high, low, high, low. Okay, price broke this high here. Remember, you are analyzing, you're not entering. Okay, price broke this high here, came back down. If you wanted to take an early entry, a little bit of a riskier trade, but you can do it. Draw your fib from the low to the high. Are we below the 50? Yes, we are. What did the market leave us? So don't try to catch the first impulse move. Wait for price to happen so price can tell you the story. We have an order block and we have a fair value gap. Where would we enter? If you took this trade, enter there, stop below the low, and we target the high. Nice, basically six risk to reward trade. Okay, so let's see what the market is doing currently. So let's say you didn't enter here. You wait for this big impulse move to happen. You wait for it. You need to be patient. Right. Price broke this high as well. Let's quickly draw our fib from this low to this high. So price went up, it came back down. Okay, awesome, came back down. Did it react from there? No, it didn't. Did it react from there immediately? No, it didn't. It broke through our order block. But what's below our order block? A nice fair value gap inside our 78.6 zone on the fib. So let's quickly go to the lower time frame. As soon as price touch our fair value gap, let's go to the 15 minute. Let's quickly see, let's refine our entry a little bit. Number 15. Alright, where is our last recent high? It was that one there. Now we need to wait and see. Okay, price came into our fair value gap. You could have entered there actually, because this big move, if you look at the bigger picture, we had our order block there. Let's just delete this. We had our order block there. Liquidity was swept there before it touched the big fair value gap, broke the high as we marked out, entered this big move, we got it. Coming back, we have this fair value gap here. Remember, price reacted from this fair value gap. Alright, liquidity was taken there. Small liquidity before price made a big move. Now let's go to the lower time frame. Let's go to the 10 minutes. Is there anything we can see? Let's quickly have a look. There was an opposite candle. Opposite candle. Let's try the 5 minutes. There we go. Here is a nice fractal high. As you can see, it's a fractal high. Alright. We made a big impulse move. Let's draw our fib from the low to the high. We are below our 50%. What is market leaving us? Small inverted order block, and that's going to be a breaker block on the 61.8. Let's have a look what price did. To the T, the wick of this price action literally touched that breaker block. It's an inverted order block basically that has broken through. And where do we target? Remember, our bigger picture is there, so you can literally enter there, put your stops there, and target there. So let's see if price plays out. If you wanted to be conservative, if you entered this trade, we broke that high. As soon as we broke it, what I would do, I would put my stop to even. But if you are in this trade and you if your stop loss is still there at the bottom, it's fine. But what I would do, I would put my stop loss even now, and then I'm still going to target this current high. And that's how you need to analyze the market. Don't try to always catch the first big thing or the best move. Wait for price to tell you the story. Wait for price to tell you the story. Wait for the impulse move after it entered on a nice point of interest, and then you look for your entries on the lower time frame. Awesome everyone, I hope this video was valuable for you. Please, if you have any questions, leave a comment. Please like and subscribe, and then I'll see you in the next video. Cheers.